Hemang, hi, morning. The big talking point this morning is, of course, the dollar index, which has been steady above the 106 mark for almost 6 days now, and crude, which is almost nearing 100. Does it seem like we could see a dip down further in our markets?
Yeah, good morning, Aisha. Yes, I think the fact of the matter is that the macros have turned for the worse, be it crude, be it dollar index, be it the way things are happening in terms of interest rates in US markets. And while the earnings trajectory for our own markets and companies is not that bad, the fact is that the markets have run up. If you look at from March till now, index, mid caps, broader market. So I think it doesn't really give you that comfort to do a fresh entry, and one would really want to create a little bit of liquidity or take some profit off the table. At the same time, when you see a little bit of volatility over the next few days and weeks, it would be sensible to kind of have some understanding of what kind of numbers are we going to see, and wherever the earnings picture is looking good, and if you see the stock, let's say correcting by 3-5% somewhere there, it would provide a great entry point as well.
Hemang, talking of earnings, we were just discussing earning probability of L&T from here on. And an influential brokerage this morning says over 30% kind of earning visibility in L&T and a new target price at 3,600. It is also emerging as a crude rebound or energy play as far as the Middle Eastern region is concerned, because 1/3 of their overall business is now overseas. How do you see L&T at this price?
Ajay, one aspect of L&T is the kind of capex cycle that we are seeing, and the kind of order book and the possible growth in earnings that one can really expect, particularly out of ENC and to some extent from hydrocarbon and defense portfolio also, which L&T has. The other part, which is even more interesting, is that in the recent open offer or buyback, retail component got subscribed by almost 100%, which means that the floating stock has actually reduced. So I think this is technically a very positive setup for a stock like L&D, and we do think that while the valuations are not exactly cheap, given the positioning of L&D and the less floating stock, it makes sense to really have some allocation towards it for, let's say, about 12 months or so. I think there's a case for a 20-25% kind of an uptick over there.
So that's about L&T, but sticking with infrastructure, JSW Infrastructure, that stock IPO got the subscription as much as 37 times, and off late we have been seeing a lot of primary market action as well. Yatra is going to get listed today. Hemang, have you been looking at any of these fresh IPOs?
Like good opportunity, while the overall subscription is on a higher side. The fact of the matter is that the space in which it is operating in is something that people really want to participate in. The group has a very good pedigree. Valuations are not exactly cheap, but I think in the current scenario, people would be comfortable with it. So I think this is one IPO that one should definitely go for it. But one will have to take a very stock specific view. Yatra is something that I think when you compare the valuations with some of the peers, it's far more, like more than 30-40% higher. It doesn't really make sense to go for it. So one will have to really take a stock specific view as far as IPO market is concerned.
Sure.
Okay.
Sure, very stock specific view. And the other one, Hemang, that we have been talking about is this entire manufacturing theme. Dixon too has announced a major announcement that with Xiaomi they are going to manufacture some of the smartphones as well. Do you think the valuations make it very, very punchy and difficult to buy? Or given the growth prospect is so humongous, it is fair to trade at such premium?
So I think this entire, the laptop part is not playing out as per the plan, because there is a relaxation that the government has announced. But overall, when we look at the additional capacity which is being built up, also the recent tie-up that it has done, clearly the case is that there is going to be upgrade in the earnings for a name like Dixon, and people really would want to participate there. So if you see a small correction, let's say about 3-5%, that would be a great entry point for Dixon, because the overall earnings growth picture is looking much, much better now.
MCX, we just flagged off that stock as well. It's been on a run up the last fortnight or so, ever since the buzz only got stronger that they're going to go live on their new tech platform. And now it's official. It's October 3rd, which has been the chosen date. Hemang, just wanted to understand about how you would approach MCX. It's run up a fair bit already, but do you think one can still buy because the story is just going to begin?
Yes, so it's a landmark thing for MCX. We've seen how delayed this entire migration has been, and the kind of money that they had to shell out when they had to extend this contract at 63 moon. So I think definitely it's a very big positive. Simultaneously, when you look at the commodities volumes on a month-on-month basis, they are growing by 24-25%. We're seeing the kind of surge which is happening in crude oil while some other commodities may have turned volatile. So I think if one is really looking at a 1 or 2 year kind of a play, then in India we don't have too many options, right? You have an MCX and a BSE. So I think people would not mind paying a slightly higher valuation for a franchise like MCX.
See, has run up quite a lot. In fact, when we interviewed the new management in April, in June somewhere, the stock has already almost doubled since then. But Hemang, I want to talk to you about these wire and cable stocks. This morning, Nuvama has put out a note saying that Polycab could actually be a play on exports now. Right now, they just have about 12% of their revenues from exports. And you would remember when they IPO'd, they had annual profit of almost 500 crore. Right now, they have a quarterly profit of 500 crore. So the company has grown a lot. But how much potential do you think they can unlock from exports?
So I think this wire and cable segment has displayed very strong growth over the last 2-3 years, and given the kind of surge that we are seeing in the residential, commercial real estate activity, and the kind of renovations that people are undertaking, there is going to be a significant growth for sure. I had seen one tweet saying that you don't replace your cables and wires at home, so why should these companies get such a crazy kind of valuation? But I think what we must understand is that the upgrades through various means, renovations and the new sales which is happening, there is going to be a significant uptick, particularly for the better upgraded, higher capacity wires and cables. So I think both for Polytech as well as RR Kabel, the growth trajectory is good. Yes, valuations we can debate, but wherever there are certain niche companies operating in a particular space where the earnings visibility is 20-25%, people do not mind paying high valuations. So I think one should have a positive bias for these names.
Okay, a positive bias for these names, but yesterday the stock which was not seeing any positive bias was Vedanta. That was down almost 6-7%. Of course, Moody's had downgraded their ratings, and that's the reason we were seeing that slip. But this morning, there's additional news flow talking about how the company might be looking at demerging their businesses and service the debt better. Hemang, do you have a view on Vedanta?
I think short term, because of this Moody's downgrade and the fact that we also had some news about some delay in the interest payments, that will not go down well. But when you look at the company holistically, given the different businesses across commodity segments, it is looking quite interesting in terms of valuations. Demerger, I haven't really looked at the details as to how much unlocking it can bring to the table. But I think any significant correction from here on would provide a great entry point because it's a great dividend yield play also.
But among separately, aside of Geo, for the conglomerate, you think there are enough triggers in place for Reliance to climb up higher and not just stay put at yesterday's rebound?
Yeah, so basically the stock has underperformed big time ever since this demerger and the listing of Geo Financials happened. So I think when you look at the overall business, including the Geo part, it is surely looking quite attractive in terms of valuations. The higher crude oil price would also have some rub-off on on the refining component of the business. And even on petchem, we are seeing the margin stability coming through. So I think from a investment perspective and valuation perspective, that is surely looking quite attractive because you have additional triggers in terms of the unlocking of the value of this Geo Financial, which is not reflected in the current price. So I think it is looking quite interesting at this point of time.
Hemang, would you want to bet on names like Nazara or any other digital play that we have, the likes of Affle, etc.?
So I think this entire controversy or development has come as a major blow, and in many cases, the amount involved is far too large, and that would really put a question mark on the sustainability of the businesses itself. So we feel that this entire matter and the legal thing is going to continue for an extended period of time. Whether it's going to be a gross amount that the person has betted on, or the final amount, win or loss, as the case may be. So for somebody who is taking a very has a high risk appetite, I think having seen such a major blow, there can be some opportunity, maybe a 2, 3, 4% kind of an allocation can be made to the names like Delta Corp or Nazara, where the tax amount is hardly about 3, 3.5 crore. But yeah, in terms of the sentiment, in terms of the legal battle, I think this is going to be a space where people really would want to stay away from, particularly those who are looking to play a little stable earnings visibility kind of a model. They would not want to get it.
Mang, we are also entering, in fact, we have entered the festive season with Ganesh Chaturthi, Raksha Bandhan, etc. And this is usually the time when consumer durable companies have a very good sales, the next 2 quarters. Do you like any of the names out there? You'd like to play them?
I think festive season, you would have some, kind of a correlation with the auto names, because a large part of the sales, almost about 30, 40%, they clock during festive season. So surely some of the passenger vehicle like Mahindra, Maruti, some of the two-wheelers, those are the ones where people would really want to focus upon. When it comes to consumer durables, the trend is a little mixed. You've seen certain categories doing well, but it's not a broad-based kind of play. So we do like Havells and to some extent Crompton, where Crompton has been a financial play, and there's a catch-up vis-a-vis some of the other names which have really popped up very well. But I think one will really have to take a stock specific. More importantly, given the high expectations people have from the festive season, we need to see initial numbers come through so that the conviction over there is high. But yes, Havells is something that would surely be positive on.
So that was about Havells. I also want to put the spotlight on the IT sector. Of course, today later we'll get the number from Accenture. Remember, this is going to be the fourth quarter earnings for them, but additionally they'll come out with the FY24 guidance, and that will be the key as to how the next few months, etc., are likely to pan out. They would be talking about how client spends are actually shaping up, what kind of weakness are they seeing when it comes to the consulting business, offshoring, what the trends are, because for now the street is penciling in that there could be a guidance of 3 to 6% constant currency growth in the coming year. And what happens to the headcount as well, because last quarter they had shaved off almost 19,000 jobs, and that was a precursor to the kind of weakness in demand that they were witnessing. But what happens from here on, and what they talk about the generative AI opportunity as well, will be very crucial, because just come next week we'll start getting earnings from the likes of TCS, HCL, etc., which will begin from 11th of October itself. Hemang, ahead of the earnings season, is there any trade or any position that one should build up on the IT sector?
So IT, I think large part of the pain is behind, and when you look at the Nasdaq, which is actually going through a bit of a correction, almost about 5 to 6% kind of a correction is already over. So depending upon how the some of the IT companies deliver the numbers or give the guidance, that have a major bearing on the Indian IT companies also. But our interactions with TCS and some of the large companies is suggesting that the order inflow continues to remain by and large intact, no real big surprises. And if you see, TCS in particular has remained quite resilient over the last, let's say, few weeks. So I think surely, not only just from a result perspective, but purely from a valuation and the fact that there's going to be a rebound in the IT spend over the next, let's say, 1 or 2 quarters, I think TCS, HCL Tech, they both are looking quite attractive at current prices and valuations.
And Hemang, an interesting note coming in from UBS. They maintain their buy and they've got one of the most bullish price targets on the street at 3,600 rupees per share. And they're saying that they're going to record a very healthy 17 to 32% CAGR in the duration of FY23 to 26. You think that's a possibility?
Yeah, I think given the overall positioning in terms of the current portfolio of businesses that they have, ENC the traction continues. You are seeing a good revenue growth visibility when it comes to hydrocarbon and defense part, and also as I mentioned earlier, once the open offer is over, when 100% of the retail participation is done, which means that the floating stock has reduced even further. So I think both from a technical float point of view and the earnings point of view, things are looking good. And valuation, yes, it's on a higher side, but I think wherever you see the delivery of earnings, people not mind, buying that stock. So I think from a medium to long term perspective, L&T would remain one of the top, picks that one can think of.